Hey investors, Justin here. So I've been doing a lot of stock screening lately, looking for trends in the market that I might be able to capitalize on. And I want to share with you today 3 stocks I found that have outperformed the market over the past month. And just in case you are curious, I have added all 3 of these stocks to my portfolio within the last week. So I do have skin in the game when it comes to these 3 names. But not only have these 3 stocks outperformed the S&P 500 over the past month, they have also outperformed Tesla over the past month. And the nice thing about these stocks is that it appears the momentum is not going to stop anytime soon. This is because all 3 of these stocks are tied to the recent real estate boom we are currently experiencing. And unless the Fed jacks up interest rates and the housing market suddenly cools off, these stocks should continue to rise. So if you're worried that you are too late to the party with these stocks, don't be. Now, before I give you the name of these stocks, let's talk a little bit about what is going on with the real estate market right now. A record low supply of houses combined with record high lumber prices is putting a big strain on the supply side of the housing market. But at the same time, record low interest rates are also incentivizing people to buy houses now instead of waiting until later. And this is leading to people getting into bidding wars all over the country. In fact, where I currently live, I have heard of multiple people offering 10% or more over asking price just to make sure they are the top offer. And keep in mind, I live in Kansas. So if we are experiencing this type of insanity here, then I know a lot of cities across the US are facing similar problems. So with that being said, let's go ahead and get into these 3 stocks. The first stock is a company called Louisiana Pacific Corporation, ticker symbol LPX. Now, LPX has returned nice returns for investors lately with a 6-month return of 144% and a 1-year return of 250%. But despite these impressive returns, one of the reasons that the good times could keep rolling for LPX stock is because of the products and services they provide. Louisiana Pacific manufactures and sells building products that are primarily used in new home construction, repair and remodeling, and outdoor structures, which are all areas of the market that are booming right now. But what's interesting about Louisiana Pacific is that their expertise is in manufacturing engineered wood products, which puts them at a big advantage. Instead of trying to compete for the limited supply of lumber that's out there right now, Louisiana Pacific can instead rely on their own factories to make all the artificial lumber they need. Also, with lumber prices continuing to rise, this makes Louisiana Pacific's artificial lumber look a lot more attractive, which means they can either keep their prices low and sell more, or they can raise their prices to match the current price of lumber and increase their profit margins. So either way, Louisiana Pacific is in a great position to take advantage from what is happening in the housing market right now, and they should continue to rise over the next 3 to 6 months, if not longer than that. Now, one big question I had about LPX stock when I first came across it was whether they were simply a small regional company or if they had access to larger markets. And despite having Louisiana in their name, LPX is not confined just to the state of Louisiana. In fact, LPX sells their engineered wood products all over the US and even has operations in South America, which, interestingly enough, South America is a big market for lumber as the region transitions to more wood frame homes. So that could be a huge source of growth for LPX moving into the future, and I think it's something to keep in mind. But with that being said, overall, LPX operates 25 manufacturing plants in total and has operations across the US, Canada, Chile, and Brazil. And another interesting fact is that despite LPX having Louisiana in its name, it is actually headquartered in Nashville, Tennessee, which doesn't really make sense to me, but Tennessee is one of the few states that doesn't have a state income tax. So maybe that is why they decided to be headquartered there. Now, before we move on, one thing I really like about LPX is that despite going on a huge run over the past year, it is actually still potentially being undervalued by investors. According to Fidelity's advanced research tools, LPX only has a PE ratio of 9, which is almost half the average PE ratio for the paper and forest products industry as a whole. Also, if we look at the fundamental analysis tools Fidelity provides, we can see that LPX scores an 83 out of 100, which puts it squarely in the undervalued category. Also, if we look at the growth stability metric, we can see that LPX scores a very impressive 98 out of 100, which means that LPX has shown a clear pattern of growing their earnings and cash flow in the past, and that they are likely to continue doing so moving forward. So to me, the low valuation combined with the high growth stability makes LPX stock a great stock to buy and hold until the housing market starts to cool off. Okay, next I want to talk about Restoration Hardware stock, ticker symbol RH. Now, this stock is slightly different from LPX in that it does not operate in the construction industry whatsoever, but that does not mean Restoration Hardware is not benefiting from the housing market boom. In fact, Restoration Hardware is just one of a handful of home furnishing stocks that have seen a huge boost in sales recently. Companies like At Home and Williams-Sonoma have also seen their stock prices skyrocket lately thanks to the real estate boom. In fact, because of the current housing market, Restoration Hardware stock is up 380% over the past year alone, and At Home stock is up over 1,300%. But we will talk about At Home stock in a minute. For now, I want to focus on Restoration Hardware stock. Now, to understand the market conditions propelling Restoration Hardware stock higher, we have to look at both the short and long-term catalysts that are happening right now. We have just ended a full year of lockdowns caused by the pandemic, and during that time, people have spent a ton of time inside their homes, not to mention also working from home, which a lot of people had to do. But this increased time at home has led a lot of people to upgrade the things in their houses, from furniture and decor to towels and bed sheets. And with the work from home trend potentially continuing for many years, this should keep happening for quite a while. Now, in addition to people spending more time inside their houses, another thing that is happening is that people are buying more expensive houses in general. Or I guess you could also say that houses are simply getting more expensive to buy. But, what can you do about that? And when you spend more on a home, you tend to also want to spend more to furnish your home, which I guess would be more of a psychological phenomenon, but I think it is still valid nonetheless. Also, something else that plays into this phenomenon is the trend of people buying bigger and bigger houses. In fact, from 1975 to 2015, the average house size rose from 1,600 square feet all the way up to 2,600 square feet, which is a 60% increase. And what's even crazier is that it is not only younger people upgrading to bigger homes, but also a lot of older people are choosing to upgrade. In fact, I recently found this article that stated that out of 3,600 retirees surveyed, 49% didn't downsize their house in their last move. And what's crazy is that 30% of those retirees actually upsize their houses in retirement. So the trend of buying bigger, nicer houses is something that I think will continue for quite some time. And therefore, I think we will also see these home furnishing stocks continue to keep rising as well. Now, obviously, the recent gains in stocks like Restoration Hardware won't keep going for forever, and these stocks will most likely slow down at some point. But the long-term trend supporting these stocks means that you don't have to worry about these stocks going to zero anytime soon. And I think there will be plenty of time to get out if you do want to try and time the top. So if you have some extra cash sitting on the sidelines, a stock like Restoration Hardware is a great place to park your cash for the next 3 to 6 months. Now, in terms of fundamentals, RH stock is not considered a value play. But with that being said, it's not like it is overvalued either. RH stock has a market cap of $15 billion and a price to earnings ratio of 34. And even though 34 is higher than the PE ratio for LPX stock, keep in mind that Restoration Hardware operates in a different segment of the market. RH stock belongs to the specialty retail sector, which has an average PE ratio of 38. So based on that, it is definitely not overvalued. And to back this up, we can see under the fundamental analysis section that Restoration Hardware scores a 63 out of 100 when it comes to valuation, which puts RH stock on the undervalued side of the scale. And it also makes me believe that there is still some upside left in the stock. Okay, the last stock I want to talk about is a stock called At Home. Now, this is a very small stock and only has a market cap of $2 billion. But despite the small market cap, some analysts think the stock has a lot of room to grow. In fact, according to Adam Wilk of Greystone Capital Management, At Home is likely to double in price within the next 2 to 5 years, which I honestly think is a conservative prediction. Now, in his research report, Wilk explains that At Home trades at a discount to comparable companies on every relevant metric and is currently trading at a level that appears too cheap for its fundamentals. Wilk then goes on to say that if At Home can continue to execute by opening new stores, managing inventory well, and keeping employee costs low, it should enjoy healthy revenue growth, good margin expansion, and an expansion of its PE ratio. So based on Wilk's analysis, it appears that At Home stock has a lot going for it right now, and all management has to do is continue executing well, and the stock price should continue to rise. And I tend to agree with him for a number of reasons. The first is that according to Fidelity, At Home stock is severely undervalued, sporting a rating of 93 out of 100 on the valuation scale. Also, if we compare the market cap of At Home stock to the market caps of similar stocks, we can see that At Home has plenty of room to grow. Top competitors of At Home include companies such as Target, Ross, and TJ Maxx, just to name a few. And what's crazy is that all three of these stocks trade for anywhere between 20 to 40 times the current market cap of At Home stock. So make no mistake, Home stock has a long runway of growth ahead of itself. And like we said earlier, as long as management can execute well, then Home stock has a potential to be a big winner over the coming years. And there was a lot of information in that research report that I did not include in this video. So if you guys want me to do a deep dive into At Home and explain the investment thesis in more detail, let me know down in the comments. But overall, those are just a couple of stocks that I am buying right now as I try to diversify my portfolio and add some value plays to the mix. And I think being able to employ a more sophisticated investing strategy where you factor in things like fundamentals and valuation will be helpful over the coming months as we face a lot of uncertainty in the market. Things like Biden's big spending packages and the threat of increased taxes will weigh on the more speculative growth stocks that many of us have relied on for massive gains over the last year. And it may take a while for some of these names to come back to life. So in the meantime, I think adding some value plays such as LPX, RH, or At Home stock to your portfolio will be very helpful. So if you guys enjoyed the video, make sure to hit the like button. Also, let me know what trends you see in the market right now. Are you trying to rotate out of some of the high growth tech stocks into more cyclical or value plays? Or are you simply doubling down on your highest conviction stocks? Let me know below. And with that, thanks for watching, and I'll see you in the next one.